Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, entrepreneurs, executives, thought leaders, and all amazing people all around the world of crypto and blockchain. And today, I have another amazing guest. I have Ricardo Johnson, who is the founder of Oases. Ricardo, welcome to the show.
Thank you for having me, Jamil.
You're very welcome. It's a pleasure to have you on. And let's kick things off. I ask everybody the same question. I get amazing answers. What is your background, and is it a logical background for what you're doing now?
Great question. Yeah, it's a logical background for what I'm doing now. So I initially graduated with a degree in finance, and before getting into real estate, I actually ran a men's clothing brand for 10 years. I exited that company and started what we would call in the UK deal sourcing. So essentially what I would do is, contact private investors and act on their behalf and find investment opportunities for them to invest in the real estate market. And I've done that for the past 8 years. Around that time, I was introduced into crypto and smart contracts. This is like slightly before the NFT wave. And that's where my mind started, expanding in terms of the opportunities that this technology can actually have for assets in general. At that time, I didn't have the experience or the confidence to really, tackle that problem then head on. So I just kind of, shelved it. And back in 2020, during COVID, I actually started my first tech company, which then developed into me tokenizing some investment opportunities just for a small community of investors. After that, success, I then, had the experience, confidence, and to start actually building out Oases, which is more of a fully integrated marketplace for tokenized real estate.
Awesome. People don't realize that some of the better projects now started in 2020, like Solana and Avalanche and stuff. So, a lot of good things came out of COVID.
I agree.
So Oases, what's it all about? What's your vision and your mission?
So my mission is to really democratize real estate ownership. From my experience, working in property, I realized that, majority of people are, singled out. They're not able to actually access this asset class. And, over the past hundreds of years, in fact, but, it's a nice stable investment that grows, over the long term. But the barriers to entry to actually get involved is so high. And, as the prices are increasing every year, the barriers to entry are increasing every year, So my mission was to, how can I create a way to make this more accessible, Another issue that I found is that depending on, whether you use managers or not, there's, the management headaches that you have with managing your portfolio. You have to constantly, be on top of what's happening with interest rates. You're pretty vulnerable, and highly leveraged in most cases. But I thought, with this technology now, we can now democratize that ownership. So instead of having, full ownership of the property, you can own a fraction of it without any debt or anything. You can earn, probably better returns, in fact, without any of the management headaches. So in one sense, it's probably too good to be true. But I think at the time we're in now, we're actually able to do that.
So let's get a lay of the land as far as the real estate. Your clients are focused on purchasing commercial or residential, and where?
So we actually focus on luxury resorts. So what I do now is, I approach developers from all over the world who's developing these resort projects. They have one issue in terms of being able to sell through their units, fast enough with a global market. And I then have investors on the other side who are looking for these type of opportunities in, emerging markets, for example, where they can get those, comparable returns. Also, have the lifestyle benefits of being able to go and visit these resorts and, be able to have that tangible aspect to, a commodity, essentially. So what I thought would be, a great unique selling point is being able to sit in that middle that middle ground and being that marketplace between the two parties.
Got it. I'm wondering, like, there are a lot of people who think, okay, the best resorts are the ones in the Caribbean that are established, or the Maldives or Fiji, right? But there's
Yeah.
like a lot of good resorts in places like Cambodia, you know, and
Yeah.
Sihanoukville. Like, how do you choose how do they choose, you know, where these resorts are going to be?
It's a great question. I suppose how I personally look at it is depending on what's the tourist growth in that region, for example. So you have like established markets, less like places like Bali, for example, you know, Indonesia, that over the past 5 years, you know, also since COVID, you know, I've seen, you know, astronomical, you know, increases in demand. Their prices have, you know, skyrocketed. Same place like Dubai, Costa Rica, you know, all these regions which, you know, are now, when people are more, you know, globalized, people are way more globalized these days, these type of opportunities or these places become more attractive, you know. So what I look for is where are those opportunities now, you know. So at the moment we're looking at a resort which is in East Africa, Tanzania, you know, Zanzibar specifically, which has seen high growth over the, you know, recent years, and there's a lot of resorts being developed there now. So where I suppose you can follow the money, essentially, you know, follow the smart money, and you can see where these new resorts are being developed and get in on the action.
Nice. Okay. I've never been to Africa. It's on my bucket list. So,
Good. Good.
yeah. So real estate tokenization, like, has it revolutionized not only the real estate industry, but also maybe the crypto industry too?
Yeah, it's an interesting one. I think, you know, there is an issue in the crypto community in terms of how can we bring more people into crypto. And my personal belief is that real estate and other real world assets is really that bridge between it, you know, where you can have the digital assets, but there's still you know, a tangible asset backing it. So most of the people who are not engaged in this, you know, technology, you know, who are maybe skeptical of, you know, what's behind it, I don't really understand it. It's projects like this, you know, which can create that bridge where it's something that they're already familiar with, but now have a new interface with it, you know?
Yep. So, um, I'm just like, you know, that, I mean, you're in the UK, right?
I'm based in Spain.
Spain. Okay, very cool. You have great food over there.
Yeah.
So, um, Donald Trump, our new president, said we're going to create a strategic crypto reserve in the U.S., right? And you have a lot of
Makes
people who
sense.
think supposed to be Bitcoin only, and you have other people who are getting into the conversation like XRP. And I'm like,
Mhm.
I'm thinking there should be an index, but why shouldn't that index include real estate? Because real estate seems like opportunities that people should have around the world.
100%. 100%. It should, um, not even just real estate. You should have bonds in there. You can have tokenized gold in there. They should really, if they want to be, you know, the crypto hub of the world, um, that reserve should reflect that also. You know, a wide variety of assets.
Okay, cool. So the key opportunities now for investors then interested in tokenized real estate, what are they, and what are the challenges?
Um, I suppose to start with the challenges. The main challenges is the regulatory landscape, especially when you're thinking of like on a global scale. Each region will have its own jurisdiction, its own rules and regulations around it, um, which are really, you know, stifling a lot of projects at the moment. Um, I think for most people now, the hope is now that Donald Trump's in place and, you know, he wants to kind of spearhead, you know, the crypto movement, especially for the US, is being able to maybe relax some of the restrictions around it, around tokenization and those things to really, you know, have more innovation in that space. So that's really the main challenge of navigating those waters. But the main opportunities is that, think about it. If you were to buy a property today, like, you know, it's going to take you a couple months to actually, by the time you decide you're going to buy it to when you actually get the keys and go through the legal process, you know, that's a long time. And it's even worse when you're trying to sell it. But imagine now that you can have, you know, a global marketplace where you can instantly buy and instantly sell these assets. You know, a bit like how you would trade stocks or crypto, but you can do that with real world assets. So these are the type of opportunities that, you know, are on the horizon, essentially, that, you know, will help a lot of people not just access it, but access it anywhere in the world. You don't have to go through, you know, the same. Once you've gone through the KYC, once you've done the AML, you know, checks, money laundering checks, you can literally build your portfolio at your own pace, you know, from the comfort of your own home, and, you know, build your digital wealth.
Yeah. So I like that idea, building digital wealth. That sounds good to me. You are, like said, in Spain, you're subject to MiCA, right? So
Yeah.
how do you navigate the MiCA rules and regulations for the real estate market?
Well, luckily my company's not registered here, so I avoid it that way. But yeah, it's a minefield of restrictions if you were to build here. You know, with a crypto project, it's not impossible. There are, you know, tokenization platforms based here, but my main market for the people who are, you know, signed up to the platform are based in the US. So that's where, you know, everything is regulated and secured.
Okay, that sounds good. So it's easier for you.
Yeah, exactly.
Now you said some things. You said other assets, right? So what other sectors, what other assets do you foresee in tokenization occurring, and what are the advantages with them compared to non-tokenization?
So I think on the more tangible level, people are already tokenizing like luxury watches, for example. So you can own, you know, a fraction of a Rolex, you know. So people who deem them as an investment vehicle, they don't necessarily have to fork out $20,000 to go and buy a particular Rolex. They can, you know, a few $100s, and they can still have the same ownership effectively. Another thing I mentioned before was, you know, gold bullion, and being able to, you know, own gold that way. I think another one which is more on the fringe. So I seen this a few years ago, where you can essentially tokenize yourself and your earning potential. So people can invest in people this way. So this was around like the NFT hype, you know, where there were companies who were doing these type of things, and essentially, I'm not sure whether, you know, that's still in, you know, still active. But how I see things moving in the future is that these type of opportunities will be created. So think about like music rights, film rights, really any sort of intellectual, you know, property, in fact, that you can actually tokenize and have own an ownership stake in these things. So whereas to own any sort of copyright, you'd either have to know the person who owns it, or be a part of a company, you know, or own a company which owns it. Like, you couldn't really have direct ownership. Where technology is going now, I feel like it's going to open a lot of doors with all different types of opportunities for tokenization.
So companies can tokenize their CEO, and people can invest in their success if they achieve it or not, and not just paper, but like actual tangible results.
So I suppose how it worked, from the research that I've done, it's in the smart contract. You know, you would set some metrics. So let's say my earning, I'm going to pledge, you know, 10% of my earnings potential for the next 10 years, for example. And let's say you've been following me on Instagram or LinkedIn, and you'd be like, you know, this person's a winner. You know, I'm sure he's going to be successful one day, and I want to have a stake in that. So how it's actually validated and, you know, done on the back end, I'm not sure how that actually operates. But in premise, like, you know, that's what people are buying into. So providing that that person is successful and they do uphold their end and, you know, distribute 10% of their earnings, you know, essentially people are able to invest and essentially back them. You're backing that person to be successful, you know.
I think that would go over well with a lot of people.
100%. Yeah. I think more so like, I think people like music artists, for example, you know, who may want to raise money to promote an album or even to create an album, instead of having to go to directly to a label, they might have a small fan base on TikTok, for example, and maybe like, I want to tokenize the earnings potential of this particular project that people can invest in. Now, obviously, it would rely on them distributing those funds and being transparent with what's happening in those things, but it's definitely possible.
Interesting. So I want to talk a little bit about real world assets. So actually, you know what? That gives me an idea, right? You said there's going to be opportunities. You mentioned gold. You mentioned oil. So how do you tell if something is a tide? Say there's like 30 gold coins with the word gold in it, or 30 with the word oil in it, and some are meme coins, and some are actual real. How if you're new to the industry, how do you tell what's new and what's like? How can you like tell what's what? There's like a million coins coming out every day.
100%. The best way to tell is using the actual the contract ID. So you can use that to verify maybe with someone else who's invested in that. Say, is this the right, the right contract? Is this the right token, for example? In terms of verifying, because people do create, fakes of other tokens all the time, and that's the way you kind of get around that. But I think another point that's came to mind, like how else do you know also that there's gold behind that token? How do you verify that? And that's another challenge around tokenizing real world assets, is that verification aspect of it. So for us at Oases, for example, you could set up automated, verification processes, which are third party, which ensure that this real estate still exists. This real estate still doesn't have, hasn't been sold. There's no debt on it, for example, etc., which gives the investors peace of mind that that's there. But so far, there isn't like a foolproof solution for it. I think that will come in time. But obviously we're still early days. But once those things are in place, it's much easier to be able to verify and detect fraud and those things, and feel more confident as an investor. But for someone new coming into Web3, those are things you can do to kind of double check, essentially.
I guess it's easier with the real estate, right? You could say, okay, this thing's being built. How do people assess the quality?
So that's through appraisals. So once a property, the development's finished, the property will be appraised, and we have regular appraisals maybe every 6 months or even every quarter if needed. That then gives it gives the investors as well. Let's say the price has gone up by 3% in that particular area, then that's something that people can trade based off. They can maybe predict what it's going to be in 2 years' time, and be able to make investment decisions based off that. But having that that back trail of real third party appraisals also gives you verification also.
And you put that on the blockchain.
Yeah, you can put that on the blockchain.
Okay, that makes sense. That's where the speculation comes into play, right? So that's cool. So I know during his inauguration, President Trump said the U.S. is going to be the oil capital of the world. But you have all these other, energy sources like water. You have Bitcoin tied to a volcano, and in El Salvador, you have other opportunities. So how do you see the other opportunities playing out going down the line, and what do you think we need to do to bring the level of all energy sources up to par?
I think another opportunity in energy, for example, it's a tough question, actually. It's a tough question, but one, I think it can be used for good. We're in a global crisis, for energy at the moment, and it can be used as an incentive to incentivize people to, back these type of projects which are using clean energy or, nuclear energy, for example, which can really take us all off fossil fuels eventually. And being able to have direct ownership in these type of projects, could be the catalyst to really achieve, the 2030 goals or 2050 goals, whichever, that everyone set. I know you mentioned about like the volcano being attached to Bitcoin in El Salvador. It's a very interesting project or interesting use, but it's a very smart use of being able to get energy, because we're using crypto is really backed by GPUs, and it needs power. So if you can find a sustainable way to power it, it's definitely needed.
Yeah. What I like about this industry is a lot because the innovation opportunities a lot of people don't think of,
Yeah,
but
exactly.
So I want to ask you, strategies. What are some important strategies for tokenizing efficiently from a developer, an investor, and an operational view?
Good question. So tokenizing for a developer, I think because the market's still new, so essentially there is a retail market, but it's still minuscule compared to the potential for a retail market. But it would be starting to explore new platforms that are being developed like Oases as a way to now sell through your units, to be able to access a wider pool of investors. So instead of having to rely on the traditional methods for marketing, or for sales, for example, there's more opportunities to find a global audience, for your projects. I think that's the main opportunity for developers. For investors, I think the main thing for investors would be to really put time in educating yourself on these type of opportunities. I think crypto is traditionally, deemed as a way to not say get rich quick, but when you talk real world returns with a crypto investor, it's not as attractive. If you're talking like from a real estate perspective, anything over 10% is pretty good, for a return on investment. But in crypto, that has to be 100, 1,000, or 1,000%. It's so it's that bridging that gap, which I think is really a big opportunity, because imagine someone who has hundreds of thousands or millions of dollars in crypto assets. Real world assets that are tokenized is a great way to hedge. It's a great way to diversify and to de-risk some of your portfolio, without having to completely off ramp back into fiat to make these purchases. And for operators, I think now is the perfect time. I think with where we are in the market, it's a very established, crypto market. Now there's trends that you can use. We have a strong narrative now of bringing a billion wallets, a billion users to crypto. We have a strong president in the US, which is really spearheading what's going to happen in the crypto market as well, and sees the opportunity there. So for developers who are thinking to get involved, I think now is the perfect time. Technology is getting cheaper to build on. It's more accessible for people like myself who are non-technical, and especially if you have the experience with the real estate or whichever real world asset that you have, to create a solution for investors is much easier now.
I think it was a couple of years ago. I saw. Well, it's interesting you say 1,000x is an expected return. I saw like the top hedge funds, and like the top hedge fund was like returning 25%. And if you have the 10%, that's a good thing in the TradFi world, and there's a bull market coming. We're not at the peak yet. With a little bit of pullbacks recently, but like, wouldn't 2x be an amazing return, or 3x, or why should people no longer expect 1,000x as a number?
It's I think it's just the mentality of the type of opportunity. I think overall, because anyone who's involved in crypto now, it's still pretty early in the grand scheme of things, right? If you think over the next 50 years, like people who are invested over the last 5 years, last 5-10 years are very early. So, this type of opportunity is expected. Those type of gains are expected over the long term. But also on the flip side is a lot of investors in crypto are very short term. They're not, unless you're like a Bitcoin maximalist or whichever, you're really investing today to be able to sell within the next 3 years, essentially, to purchase something else. So it's a way that if you get in early on a particular meme coin or any other coin, you can see those type of returns, which means that a lot of people lose also. But I think even in real estate now, for example, tokenized in real estate, studies show that it increases the value by 30%, by up to 30%, just from having something that's more liquid. So there's huge gains there. And if you own real estate, today that you own for the last 10 years, you've already doubled your money there. It's just a longer horizon that you have to wait for. But those returns are still there.
Interesting. See, I find it fascinating. I find the Bitcoin maximalist in general fascinating, because you believe in this single new financial system, right? But I don't think we're going to see the real benefits until towards the end of the Bitcoin mining period, which is 2132, right?
Yeah.
We're not going to see it during our lifetime. What do you think?
I disagree with that. I think we're already seeing it. You have to think. I mean, when I first got into crypto, Bitcoin at that stage was around like £6,000. So let's say $8,000, for example. Like, to compare to today, where we're more or less 100,000 plus. Like, so there have been huge gains now, and I think, and that's like, we still have a load of like over 1 million or even 2 million left to mine, right? So there's still a load more to mine. So yeah, to what you're saying, over the next 120 years, that's when the final Bitcoin will be mined. But leading up to then, how many halving processes do we have to go through? So how many times does the payout for that half? So it creates a supply squeeze for more people that want to invest in it. There's less return on being able to mine it. It's costing more to mine it. So that in itself creates more pressure on the price to go up. So I think in our lifetime, we'll be able to see that $1 million coin. I wouldn't go on the record, but that's what I feel like. I feel like we'll get to that $1 million coin, which I think at that point it's positioned to become like a world, a world to be able to back, the world's currency at that point.
Say that happens. Say it happens, and I hope it happens. What do you think about, like, a lot of young Gen Zs today? They can't afford a house. Will they be able to afford a house, a real estate property that they're?
No, they'll probably never. I mean, you got to think the new generation now. They'll probably never be able to own a property. I think in the UK, for example, the average is £300,000, which means, well, maybe to own one personally, they would need at least 30,000, as deposit. So unless they have parents or grandparents who are able to help them, maybe they remortgage their property to give them the deposit to get on the ladder, essentially. That's really the only way. But if they're starting from scratch, it's going to be very difficult for them to work their way to do it, because they say it takes them 5 years to save that. Then they've got they're battling against 5 years of growth also. Then you have interest rates, which means your affordability criteria increases. So there's a lot of things at play which makes it very difficult to really gain access to that. And that's just your residential. you got to think if you now have a rental property, that's a whole nother field where you need now 25%, you know, at least 25% to put down. So it kind of makes it an asset class that it's still attractive, but there's so many other opportunities now, you know,
such as tokenized real own a
such as
portion.
tokenized real estate, such as Bitcoin, such as, you know, it's these type of assets, digital assets, essentially, that really democratize access to wealth. You know, you still have stocks, you even have stocks, but there's stocks that are, you know, $1,000 plus that, unless they can get it fractionally, they can't actually own either. So it's challenging. It's definitely challenging.
Yeah, interesting time. So that's I look forward to seeing how how Oasis plays out and how people are able to use your platform to have that fractional ownership. So
yeah, thank you.
yeah,
Looking forward to launching in February, and we have our first tokenized resort, as I mentioned, in Zanzibar. You know, to get involved, you can actually own real estate for less than $2,000, and earn at least, you know, between 10 and 16% ROI. So it's a great overall investment opportunity. Let alone it's backed by, you know, real world asset.
awesome. So I want to thank you very much for speaking with me today. I enjoyed this conversation. I have one last question. It's easy. How can people get involved? How can people find out more information about you, about Oases? How can they start to invest? How can they do that?
So you can go to ownoases.io for the website. We're on Instagram, LinkedIn. You can connect with me on LinkedIn also at Ricardo C. Johnson. I'm on Instagram at Rico C. Johnson. But yeah, you can just send me a DM, go into the website. You can sign up there, join our community channels, and get involved that way.
Awesome. Thank you very much for your time today.
Thank you, Jamil. Take care.